Canada has the highest level of household debt in the G7, according to a report by the country's housing agency, the Canada Mortgage and Housing Corporation. For more on the country's debt and the risks that could come with it, we're joined by Iorwerth, the Deputy Chief Economist at the CMHC. Thanks so much for joining us today, Aled.
Good to be with you.
So put it into context for us here. We have the highest debt ratio in the G7 countries?
Yes, the highest household debt level, and it's been going up for many years. Back in the last recession, the U.S. was about 100% of household debt to GDP, and it's gone down to 80%. Canada was at 80%, now it's at 100%. So Canada and the U.S. are going in opposite direction on household debt levels.
So what's happening? Why is that?
Well, that's 3/4 of it is mortgages, and so people are piling into housing. They're getting a lot of debt to get into housing because of the high house prices. We have a major affordability problem in Canada. There's not enough housing supply. House prices are going up. People are getting mortgages and going seriously into debt.
So a big chunk of this really just comes down to mortgages, and then the other quarter of it is other consumer debt, like credit cards or other sort of loans, HELOCs maybe?
Yeah, auto loans, credit cards, all sorts of other debts. Those are obviously a challenge in the short term, but the overall direction is being set by the amount of mortgages that Canadians hold.
And so at this point, the amount of debt that Canadian households have exceeds Canada's GDP. At what point did we cross that threshold?
Well, it's been stable for a year or two, so it's been a few years, but it's the direction. It's still going up, and this is a problem. So like I said, Canada today is in the position that the U.S. was in 2007, prior to the last Great Recession. Yeah,
how concerning is it that, real estate perhaps is booming in Canada more so than our economy is expanding?
Absolutely, and that's the problem. We need some parts of housing to be booming. Housing construction going up would be really, really helpful. Unfortunately, it's the house prices parts that are booming. But also rental. I mean, it's good luck finding a place in a rental building these days. So the housing market is really, well, for want of a better word, booming, and incomes not so much. So as a result, debt is going up.
Are these debt levels sort of a new normal that Canadians will be living with from now on, or is this part of a cycle, do you think, that can't last forever?
Well, it could last forever, but having debt levels at these heights do create risks for the economy. So our hope is that with more housing supply, greater affordability, these debt levels can start to come down, because otherwise paying higher interest rates on these debts, trying to repay these debts, this is going to be a drag on the economy. And again, as you mentioned earlier, we have payments on debt going up and incomes not so much going up.
Yeah, how do you see Canadians, further adjusting to higher interest rates? We saw in the financial services report just recently from last week from the Bank of Canada, that people will continue to feel this as they're renewing their mortgages. The full effect hasn't been felt just yet.
Right, exactly. So people with variable rate mortgages are already facing it, but people with the typical 5-year fixed, they haven't yet faced the full effect of this. And it's at the same time the economy is slowing as the effect of those higher interest rates are coming through. So you asked, how are people dealing with this? And unfortunately, the answer will be with difficulty. Consumer prices are going up. Mortgage payments are going to go up. So it's going to be a challenging time for household budgets.
And potentially, could it lead to higher debt even, if people are having to, borrow from Peter to pay Paul kind of situation?
Yeah. Yeah, absolutely. I mean, when things get difficult, and that's one of the risks, is supposed as widespread job losses, supposed as a recession coming, which we're not forecasting, but suppose that we're a recession, it's going to be a major problem, somehow or other trying to make ends meet with all this debt overhang.
So how can Canada change this, this situation and not be, one of the leaders in household debt?
Well, unfortunately, there are no quick fixes. Over the long term, it's going to be more housing supply. More housing means greater affordability, less need to get into debt to get into the housing system. So, and that's going to put over time, or try and keep this household debt in check. But this is not a quick fix. This is a multi-year process to try and get the housing system back in shape.
And I suppose when you're looking at debt compared to GDP, and debt outpacing it at this point, if our economy, picked up the pace here or what have you, then perhaps we could see it move in the other direction, just because the economy is performing particularly well. But do you see that happening?
Well, first of all, your point is absolutely right. If Canada were to improve productivity, get more research and development, more investment, more human capital, then yes, the economic growth would recover and outpace the growth in debt. Unfortunately, Canada has a very poor track record of improving productivity. And so I'm not one to forecast an improvement in productivity anytime soon in Canada.